Hi everyone, this is Lisa of Accounting Wise. Today we will continue our study about the double entry bookkeeping system, and we will answer the exercises we provided for you in the previous video. So if you remember, this is the exercise that we provided for you. The requirement is to record the following transactions to the T account. But before we could record them or transfer them to the T account or the ledgers, the first thing that you should do is to provide the journal entries or do the journal entries. So let's do it. So number one, set up your business. Introduce capital. Let's say that Elsa wanted to sell jewelries in a mall stall and she has 80,000 to put into her business. So we will debit cash of 80,000 and credit Elsa capital of 80,000. You can also provide another space here for the description of the transaction. For example, in the first transaction, you can say to set up the jewelry business of Elsa. Number two, Elsa borrowed money from her parents for additional capital to her jewelry business. So we will debit cash of 60,000 and credit accounts payable, long-term payable of 60,000. Next, she bought a display rack of 5,000. So that would be furnitures and fixtures. Debit furnitures and fixtures of 5,000 and credit cash of 5,000. Number four, she bought jewelries on account from her supplier for 90,000. So we will debit inventory of 90,000 and credit accounts payable of 90,000. Number five, she paid her supplier in the amount of 50,000. So we will debit accounts payable of 50,000 and credit cash of 50,000. We should put it down. Credit cash of 50,000. So number six, Elsa sold 75,000 worth of jewelries, which originally cost 50,000 on account. So we will record two journal entries. One is the sale and the other is to remove the jewelry sold from the inventory and transfer it to cost of sales. So the first one is let's record our sales. So debit accounts receivable because it was sold on account of 75,000 and credit sales of 75,000. Next, we'll record the transfer of the inventory to cost of sales. So we'll debit cost of sales of 50,000 and credit inventory 50,000. Number 7, Elsa sold the remaining jewelries for 52,000 cash. So we'll again have two entries, one for the sale and the other for the removal of the inventory and transfer to cost of sale. So let's record first the sale. It is a cash sale, so we will debit cash of 52,000 and credit sales of 52. And next we will debit the cost of sales with the remaining. So as you can see here, we have an inventory of 90. We sold 50, so the remaining inventory is 40. So number 8, paid rent to the mall stall 6,000. So we'll debit rent expense of 6,000 and credit cash of 6,000. And last, we have Elsa withdrew 3,000 for personal use. So we will debit Elsa drawing of 3,000 and credit cash of 3,000. Okay, so let's total the amount of the debits and credits. So we have 80 plus 60 plus 5 plus 90 plus 50 plus 75 plus 50 plus 52 plus 40 plus 6 and 3,000. So the total of your debits and credits is 511,000. So after we have done the journal entries, we are now going to post all of these to our ledger accounts. So let's go to our ledger accounts. So number one, we have debited cash and credited Elsa Capital in the amount of 80,000. Next, we have debited cash and credited long-term payable 60,000. Number three, we have debited furnitures and fixtures 5,000 and credited cash 5,000. Number four, we have debited inventory 90 and credited accounts payable 90. Number five, we paid the accounts payable in the amount of 50,000. So we'll debit accounts payable and credit cash. Next, we sold 75,000 on account. So we'll debit accounts receivable of 75 and credit sales of 75. We also debit cost of sales of 50,000 and credit inventory of 50,000. Next, we sold 52,000 for cash worth of inventory. So we'll debit cash 52,000 and credit sales of 52,000. And we will debit 40,000 cost of sales and credit inventory of 40,000. Next, we paid rent expense in the amount of 60,000. Rent expense of 6,000 and credit cash of 6,000. And last, Elsa withdrew 3,000. So we'll debit Elsa drawing of 3,000 and credit cash 3,000. So that is how you transfer all your journal entries to the ledger. We call this posting to the general ledger accounts. So after you post all of the journal entries, you will have to know the balances of each of these accounts. So let's try one. So the balance of your cash account, so let's add 80 plus 60 plus 52 minus 5 minus 50 minus 6 and minus 3 equals. So your cash account has a balance of 128,000. Your long-term liability has a balance of 60. Capital is 60. Your sales has a balance of how much is that? 75 plus 52. 127. Your cost of sales is 90. Your drawings is 3,000. Your rent expense is 6,000. Your inventory is 0. Your accounts receivable is 75. Furnitures and fixtures is 5. So let's total all of the assets. Your cash is 128. Your accounts receivable is 75. And your furniture and fixture is 5. So you have a total of 208,000 total assets. So your liability is, your accounts payable is 40,000. So 60 for long term and 40 for accounts payable. So your your liability is 100,000. And your capital is 80. 80 plus 127 minus 90 minus 3 and minus 6. So your total capital is 108. So as you can see, your assets is equal to your liabilities plus your capital. So that's it. Thank you and see you soon.